A lot of people tell you that look for a liquidity sweep, then look for a market structure shift, take your entry, and it's all going to be rainbows and sunshine. You're going to win your trade. But the problem is most of the people don't know what an actual liquidity level is. They don't know how to identify the correct liquidity levels. Well, I'm going to solve this problem once and for all in this video, and I'm going to teach you a liquidity sweep trading strategy, and I promise you that's all you need. And after watching this video, you will never ever worry about finding your correct liquidity sweep levels. Now, this is going to be the entire strategy, and this is what I personally trade with most of the times. And this is very simple and mechanical if you follow correctly. We're going to be using time and we're going to be using key levels. So make sure you keep watching till the end so you don't want to miss out anything. All right. So this strategy is going to be on the 5-minute time frame, and I primarily trade it with NQ and gold, but you can also trade it on Forex. Okay, so you can trade above 5 minutes. All right, it cannot be lower than 5 minutes, and yes, you can trade 1 hour, 4 hour daily, it doesn't matter, but make sure always above 5 minutes. Also, make sure you set your time zone to New York so you're not confused about the timings that I'm going to talk about in this video. All right, so first of all, how do you actually identify key liquidity levels, right? So this strategy is range trading strategy. I'm going to show you how to identify ranges and then how to look for those setups on the 5-minute time frame. So initially what you have to do is you have to first of all identify the current main trend or the big push to the upside, right, in the trend direction. So let's say that the trend is bullish, right? And you see this big push up, right, in the direction of the trend. Now, what you are waiting for is a pullback, all right? Now you're waiting for a pullback. So once you have a pullback, you have the range high. So for this strategy to be valid, this setup to be valid, we need both the range high and the range low. We have the range high, but how do we identify the range low? Why? Because price can simply just keep on going down, right? And can reverse from anywhere. So how do we know that which level is the real range low, which is the real liquidity level? Well, simply put, what you have to do, first of all, identify the range high, which is the big push in the trend direction, right? Then you wait for a pullback and you wait for structure to form inside that pullback. So inside this pullback, right, from this high to this low over here, we have lower low, lower high, lower low, lower high, lower low. Now, what you are simply looking for is a market structure shift within this pullback. And over here, you can see that we broke this structure. Now, this low over here becomes your range low. Now hear me out, all right? A lot of people trade this setup where they have a pullback right into some form of OTE or 50% of the range, and then they look for a market structure shift. But I promise you, if you ever take your trade from a fair value gap or here, it's gonna go down and it's gonna then push up. All right, you have seen it played multiple times, and I've seen it happen multiple times. And after, days and like thousands of hours of research and backtesting and tweaking, I've found that this is how to identify the very strong liquidity points from where, if they are swept and there is a entry model presented, I promise you that's going to be like the best setup possible. So within this pullback, we'll look for a market structure shift. We have that. Now this becomes your range low, because from this low to this high, this low, after this low was formed, we had a push up that broke the structure. So this becomes range low. Now, once we have the range high and the range low, you are simply waiting for price to either take out the range high or the range low. So let's say that in this case, that the range low is taken out. Now, you ideally primarily want to trade in the direction of the main trend. So in this case, you would look for the sweep of range low. All right, so in this case, what we have is a sweep. Now, the next step is you're waiting for a 5-minute market structure shift to the upside. Now, there are some rules that you have to follow. Now, let's say that we are here, right? And we push down, and push down, but we have a market structure shift. And you are still not going to take your entry. The next step is very crucial and very important. We have to wait for price to close above the range, back up above the range. All right, I promise this is like the most important step of the strategy. If you can follow this correctly, you will have a very high win rate. So we take out the range low, we have a market structure shift, we close back above the range. Now the next step is very simple. All you're going to do is take your entry from an auto block or a breaker block. All right, so avoid the extreme fair value gaps because sometimes price will not tap into them. So utilize the breaker block or an auto block. Now, simply put, your entry is going to be here, your stop's going to go here, and the risk management for this strategy is very important and crucial. So at 1 to 1.5 over here, you are going to go break even no matter what after your entry. So once you're in the trade and price reaches 1 to 1.5, go ahead and go break even. Now at 1 to 2, you are going to take your first partial. Okay, so that could be around 30% or 35% of your entire position. So at 1 to 2, you're taking 35% of your entire position. Now, what you can do for your second TP, you can target the 50% of the range. Okay, so let's say that this is the range here, right? And at 0.5 level, you can basically take like your second TP. So you can basically close 30% more, right? Then you're left for like what, like 40%. Then you can target the remaining. Your final TP could be the range high, the main level over here. So what you're basically doing is taking partials along the way, because these trades can sometimes provide you with 1 to 10 RR risk reward trades. And don't worry, I'm going to give you guys multiple examples with proper properly showing you how to take every single trade. Now, this would be your trade, right? Price will tap into it. It will have some pullbacks, but that's going to be pretty much it. Now, make sure that your entries are during kill zone hours. So this could be either in Asia, during London, or New York. All right. So first of all, you're going to mostly see consolidation or range formations during London session, right? So usually price will make a range right during London, and then you're gonna have manipulation during New York, and then you're gonna have a push to the upside. That's like a extra confluence that you can use. Look for consolidations during London or Asia, right? If price is consolidating during Asia, you can say that, all right, if price has been accumulating orders during Asia, we can have a manipulation and then expansion during the London. Proper basic AMD model, right? But we have to identify which level is a proper range, right? Which is the proper liquidity level, because we have liquidity level here, and then we have here. Why this is the valid liquidity level? Because it broke the structure. We had a market structure shift within this pullback, and that basically makes it your range low. And pretty much the same would apply if you're looking for a short position. So let's say that the main trend is a bearish, right? So you wait for a pullback, you wait for price to create some form of structure, right? Then you wait for a market structure shift within that pullback, right? And that becomes your range high. Why? Because after this high was created, we had a market structure shift. So this is range high, this is range low. A lot of liquidity levels, you know, people take their entries from here and put their stop losses here, and a lot of liquidity levels, liquidity is resting around here as well. You don't need to do anything extra. You don't have to make things complicated. Trading is supposed to be easy. I don't know why people are all complicated. With like in my entire YouTube career, I've always tried to simplify these models. I've always tried to give you guys mechanical models, and I promise you, when I show you these examples and when you go and back test and see the results, you're gonna be shocked on how well it works. With that in mind, with that out of the video, let's move on to the examples now. So let's go. All right, so here is example number 1. And can you identify the range around here? Can you identify the range? If you can, then congratulations, you have understood the strategy correctly. But if you haven't, let me show you. So we have this original trend, right? And this is the big push to the upside. Now, when we get a little pullback, we know that we have a range high. Now, but we need both the range high and the range low. So what do we get? We pull back and we create this high over here, right? We have this structure over here, and then afterwards you can see price goes up and takes out this high over here. Now we have a market structure shift within the pullback. Now this low caused this break of structure, right? So this becomes our range low. Now we're simply looking for a market structure shift. So we have a lower low, lower high, lower low, right? And we have the market structure shift here, but we still haven't closed back above the range. So this candle is when we get a closure above it, and we also broke some more structure. Now, if you look at it here closely, we have this auto block resting around here. A singular auto block here that swap liquidity. So price taps into this during Asia session. So this would have been your entry. Your stop would have gone here, and you would have targeted the range high. Simple, mechanical, easiest pattern trading. And I promise you, if you stick to one strategy for an entire month, you don't change anything, you don't look for more strategies, you're going to find consistency. Because let's be honest here, 98% of traders out there, they don't make any money from trading. The only thing separating them and the top 1% trader is that the top 1% traders, they stick to their model no matter what. No matter how many consecutive losses they take, they know in the long run their model works. And you will know it after you backtest this strategy and see the results yourself. Now that we have the example number 1, let's move on to example number 2. All right, so here is example number 2. Can you identify a range playing out in this area? I'm going to give you 5 seconds. 5, 4, 3, 2, 1. Well, if you identified this as your range high and this as your range low, congratulations, you have succeeded in understanding this strategy. Now, why this is a range high and why this is a range low? We have original push to the upside, that is our range high, original trend. Then we have a pullback, and within that pullback, what we look for is a structure and a market structure shift. So a market structure shift can also be with a wick when we are identifying range low or range high. So as soon as we broke above the high, this low specifically caused a market structure shift. So this becomes our range low. Now, simply put, we are waiting for a sweep of either the range low or the range high. Ideally, I want to see a sweep of range low because then we are trading with the trend itself and we are not looking for reversal trades. Now, what we are simply looking for is a market structure shift. Now, this market structure shift, when we're about to take our entry, it should be with a body closure. So when identifying the range low or range high, it can also be a wick, right? But when we are looking to take our entry, we want a body closure above the high. Now, how would you take your entry? Simple. You can see that we have a lower low and we have the fractal high and then we have a lower low. So this right here becomes your auto block. And let me refine it even further. So this becomes your auto block. Notice how we respected the 50% of this level, but this is going to be your entry right here. Your stop's going to go here, and you can see how this would have played out perfectly. Now this, I would say that you would have got close at break even at 1 to 1.5. Actually, you would have taken like one partial at 1 to 2, and then afterwards you would have got closed at break even, which happens with every strategy. And then you can see afterwards, if you want to look at the power of this model, we took out the range high. Let me give you guys another example. All right, so here is another example. And can you identify a range within this area? If you can, congratulations. But I'm going to do it for you one more time so you can understand it. So we have the original push, the original trend, which is to the downside. Now we are looking for a pullback, and within the pullback, we are looking for a market structure shift. So we have a high high, high low, then we have another high high, high low, and then high high, and then look here what happened. We got our market structure shift, right? Now, this high becomes your range high, and we have the range low. So you would mark this out as your range high, and we have the range low. Now, as I said before, ideally, you want to trade with the original move that happened. So over here, you can see we have a liquidity sweep, and then we look for a market structure shift with the body closure, and we have this auto block around here. So consecutive bullish candles that swept liquidity, and this would have been your entry. And your stop would go right above the high, and you would target the range low. Full TP hit, absolutely beautiful, mechanical as it can get, like ever. So I promise you that it is literally how you look at liquidity, because there's like so many liquidity levels on your charts, but how do you know which one to trade off of, right? So this is very, very, very important. And this, I promise you, this strategy is going to be pretty much your like bread and butter from now on. So let me give you guys one more example and then I will end the video. All right, so in this example, we have two ranges playing out on the same day. And can you identify the ranges inside this area? Well, let me do it for you. So we have the original move pre-Asia session, right? We have a big push to the upside. So that becomes our range high. And then we're looking for what? A market structure shift, right? So what we have within the pullback. So we have this. We created this structure and then we broke above it, right? Fractal high over here. Now this low will become your range low. Now, once we have the range low and the range high, we are looking for liquidity sweep. We get it right here. Now we're looking for a market structure shift, but we didn't get it here. So we get one more push to the downside. We sweep this liquidity once again, and then we get a market structure shift, and we have this auto block resting around here. So you can see how well this strategy works, guys. You can see how the power of this strategy when you trade it correctly. And I know this strategy may seem dumb to some people, but this is how the algorithm operates. Now, you're not going to get like a liquidity sweep. You get a market structure shift, you take your trade. If that were the case, everyone would be a millionaire. If it's that simple. So all it comes down to right now is identifying correct ranges. And once you have these correct ranges, I promise you no one can stop you from making money from these markets. So during London, we have this main push trend to the upside, right? So notice what happens here. We have the range high. Now we have a pullback. So look for a market structure shift within this pullback. Lower low, lower high, lower low, lower high, lower low. And notice what happens here. We created this low, but we broke this structure right here. So we have a market structure shift within the pullback. So this is like the main trend, right? And within this pullback, we created a structure and then we broke the structure. And this low specifically caused the market structure shift. Now, we have the range low, range high. Price sweeps the range low during New York at 9:30 exactly. Then we look for a market structure shift. That is your market structure shift right there. And look at this entry. Look at this. To the tick. And you can see the range wasn't that big. So this is how you would have played this out, right? So you would have taken your entry. And are you getting at least 1 to 1.5? If so, in this case, you would have gone for 1 to 1.5. You want to get at least 1 to 1.5 within the range. If it's lower than that, skip the range and move on to the next one. So I hope the strategy is clear. I'm going to see you guys in the next one. Take care. Goodbye.